What's up everybody, I am Jaspreet Singh, and the billionaire investor Ray Dalio has openly been talking about how the United States is on a decline and how we could be losing our place as the world's superpower. He calls this concept the changing world order, where right now the United States is the world order, but we are in a phase, according to Ray Dalio, where the world order will be changing, and that means the United States could lose their spot as the world order. He even wrote a whole book on it. Now, I've already made a video summarizing Ray Dalio's theory and why we might see a change in the world order sometime in our lifetimes. What I want to do today is a little bit different. I want to dive a little bit deeper into what's going on and what you can do to prepare. To understand what all this means, you have to understand how the world order has changed over time. Back in around 1625, the Dutch Empire became the world's kind of empire, the world order, and they stayed the world order until right around 1780 or so. During this time, especially in the early years, the Dutch Empire was the strongest and the wealthiest empire in the world. Amsterdam was the world's market center. All the capital flew into Amsterdam. That's where people wanted to do business. And the Dutch Empire was growing very quickly. But then after a lot of expansion and a number of wars, the Dutch Empire started to become a little bit weaker because now they kept financing their growth through debt, and they kept financing their wars through more debt. That's when around 1750 or so, the British Empire became stronger than the Dutch Empire, and we continued to see a lot of rivalry between the British and the Dutch. Now the Dutch Empire was on a decline. They were spending money that they didn't have through debt. They were funding their military, which was now weakening. And now you started to see more external conflict, while there was a widening wealth gap within the Dutch Empire. So you had a lot of internal conflict as well. And that's when the British Empire attacked the Dutch Empire in the Fourth Anglo-Dutch War. And that was when the Dutch Empire lost, not just financially, but also militarily. And that's when the British Empire took over as the new world order. Now, what you have to remember is that there isn't like a specific date as to when the British Empire became the new world order, but around 1815, that was when the British pound took over, that's 1815, took over as the new world's reserve currency. Prior to that, it was the Dutch guilder. So now the Dutch Empire lost their status as the world's reserve currency. They lost their status as the world's empire, and now it is the British's time to rule. Now, in the beginning part of this British Empire, there was an era of peace and prosperity, and the British Empire was starting to thrive. This was when London replaced Amsterdam as the new capital markets of the world, and now all the money flowed to London, not Amsterdam, because that's where people wanted to do business, and the British Empire started to grow very quickly. So now the British Empire grew and grew and grew, and eventually it hit a big tipping point where now it was expensive to run this massive British Empire because they're trying to expand and colonize around the world, and so they couldn't keep funding all their operations, so they started going deeper and deeper into debt. And then in the early 1900s, we saw the First World War, which put the British Empire into even deeper debt, while the United States was getting stronger and stronger, and they're investing in their military. Originally, the British Empire really pushed for the Industrial Revolution, which helped the British Empire grow. But then after all this growth and all this expansion, they grew so big and started taking on all this debt that now it started to hurt the British Empire, while the United States Empire started to grow. Now, after the First World War, the British Empire is deep in debt. They're trying to rebuild, and then you have the Great Depression, and after the Great Depression, you have World War II, which starts in 1939, and that was the official end of the British Empire, because now the British Empire is going deeper and deeper into debt. Their military is getting stronger. They have a lot of internal conflicts because you have a growing wealth gap within Britain, and they also have a lot of external conflicts. So now you have World War II, and who wins World War II? Well, we already know the Allies won, but that was when the United States took over as the world's superpower and the world's reserve currency. The dollar became the world's reserve currency in 1944 after that conflict, and then it was an era of peace and prosperity for the United States. You can start to see the similarities between all of them, because during that time, now the United States was able to grow. It started growing very quickly. And then around the 1970s, when President Richard Nixon took the dollar off of the gold standard, that's when the United States started printing a lot of money to fund all their operations. Before 1971, the United States was on a gold standard, which meant that if you had a dollar, that was actually a gold certificate, and that meant that you could go to the United States and demand a certain amount of gold for your dollars. So when 1971 happened, the United States was actually defaulting on their promises because you had countries around the world that were going to the United States saying, hey, we want gold for our dollars. But the United States didn't have enough gold to fund all their promises, so they defaulted and they severed the tie between the dollar and gold. That's when they went off of the gold standard, and now the United States went from actual money to fiat currency, which meant it's paper money that's backed by the strength of the United States government. And now the United States government was able to print as much money essentially at will, and they don't need any amount of gold reserves to support the amount of dollars that they have, because now these dollars are just essentially paper. This creates more inflation, which creates a bigger wealth gap, which creates more internal conflict, while we're seeing more external conflict. Like we're seeing more external conflict with Russia and then with China. And while the United States military is still regarded as the strongest military in the world, you have a lot of countries around the world that are investing heavily into their military presence now. According to Ray Dalio, when you see a change in the world order, first you see a gradual decline in the world empire, and then it becomes much more sudden because something happens, something triggers it, and you oftentimes see the exact same factors come together that we've seen happen in the past. The country or empire starts to rack up a lot of debt, which becomes hard to sustain, which creates some sort of economic downturn, which starts hurting the public. And so in order to help people, that's when the country or the empire starts to print money. Now, this money printing causes more inflation, which causes more internal conflict, which causes a bigger wealth gap because inflation disproportionately helps some people while hurting other people. And then while you start to have this wealth gap, you start to see more internal conflict while you have more external conflict. And at the same time, the empire has a weakening military presence. When you start to see these factors come together, that's how you know that you're at a decline in a world empire, and that's what can trigger the changing world order. So if that's true, where we're in a position where we could see a changing world order sometime in our lifetime, what do we do? Now, thankfully, I finally have my whiteboard here in San Diego. As you can see, it's a lot easier for me to make videos when I have a whiteboard, but there are a few things that Ray Dalio says that you should do. Now, by the way, while I'm here in San Diego, I am planning on having a meetup. So if you're interested in coming out and joining me at this meetup, I'm going to release more details in a little bit. I'll put a Google form down for you in the description or in the comments below. That way we can meet up in San Diego, hang out, and get to know each other. So let's go over what Ray Dalio says that you should do. The first thing he says that you should focus on is getting out of cash. The last thing that you want to hold on or hoard is a currency which could lose its status as the world's reserve currency. So right now, the United States dollar is the world's reserve currency, and because we're seeing so much inflation, he says that you should not be saving all of your money. Now, there's a difference between having your emergency fund in cash and saving all of your money in cash. What he's saying is you don't want to take all of your money and just keep saving it. When you're in this type of high inflationary environment, the last thing that you want to do is save all your money, because when inflation is 8 or 9% a year and you're saving thousands of dollars or hundreds of thousands of dollars or millions of dollars, well, your dollars are losing 8 to 9% of its value every single year. So if you were to save $100,000 in the bank, which isn't paying you essentially 0% interest, and you keep your $100,000 in the bank for a year, the $100,000 is going to lose $8,000 to $9,000 worth of buying power in just 1 year by doing nothing except saving your money in the bank. See, saving your money in the bank used to be a safe investment, but right now it is a guaranteed loss. You're guaranteed to lose money by keeping your money in the bank. Right? We're all worried about investing our money. What happens if I invest my money in the stock market and it goes down? Or what happens if I invest my money in real estate and it goes down? Well, if you keep your money in the bank, you're guaranteed to lose money. It's guaranteed to lose buying power because of inflation. We're seeing how high inflation is, so every day that you save this extra cash, it's losing value. Second, Ray Dalio talks about diversifying your assets. He talks about owning some stocks. He talks about owning some real estate. He talks about owning physical commodities like physical gold. The reason why you want to do this is because you don't want to be fully invested into just one asset class. Most of the time, when people talk about diversification, they talk about diversification in the stock market. Oh, I have my money invested in a growth fund and a blue chip fund and maybe an emerging market fund, something like that, where you're diversified, but at the same time, all of your money is in paper assets. All of your money is in the stock market. So if the stock market were to crash, well, not all of your money is affected, versus having real diversification, which is diversifying your money across different asset classes, real estate, stocks, gold, cryptocurrency. This is real diversification, and this is what Ray Dalio talks about. He wants you to have some stocks. You want to own equities, which are companies which are not benefiting from inflation, and you want to own the assets that are growing as the value of the dollar goes down. And you also want to own some physical gold, which is a protectionary asset. Gold isn't going out and producing more value, but it provides you with some protection because it is an inflation hedge. As the value of the dollar goes down, the price of gold goes up. Now, there's a lot of different ways to invest in gold or get exposure to gold. You can invest in gold mining companies. You can invest in a gold ETF on the stock market. I like to own physical gold. I use an app called Vaulted to buy physical gold passively. They're a sponsor of Minority Mindset. They make it very easy to buy physical gold. I'm not going to go over exactly what they do in this video, but if you want to learn more and see how you can passively buy gold with our sponsor Vaulted, I'll put their link for you down in the description below. Third, Ray Dalio talks about diversifying where your money is kept. So one of the things that Ray Dalio has gotten some heat for, but what he does is he started to make a lot more investments in China itself because he's been talking about how China has been growing, how they've been investing in their military, and how fast their economy is getting bigger. So because of that, he's been investing more and more of his money in China. Now, when you are a billionaire, it's pretty easy, or not necessarily easy, but a lot easier for you to go out and invest your money overseas. If you don't have billions of dollars, it's going to be a lot harder for you to go into a different country and start investing, but there are still other ways for you to diversify your money outside of the United States without having to leave the United States. One of the simplest ways for you to do that is to invest your money in something like an emerging market ETF. Emerging markets are countries around the world that are starting to grow. That's why they're called emerging markets. This might be countries like China and India and Taiwan and Korea. So these are kind of your countries that are up and coming, that are investing a lot more heavily. And in these countries, you have the risk that their currency could go up and down, but you also see a lot more growth because there's a lot more money flowing into these countries and they're a lot smaller, so there's a lot more potential for it to grow. But it comes with more risk because it's not as stable and well known as the United States. So if I were to translate that to the stock market, you could think of it like the United States is a blue chip country. A blue chip stock is a stock that's been around a long time and everybody knows its name, kind of like Coca-Cola. Coca-Cola is a blue chip stock. They've been around forever. Everybody knows what Coca-Cola is, and they have a very predictable revenue stream and profit stream. So the United States is like Coca-Cola in that it's very large. You're not going to see Coca-Cola's profit double in just 1 year because they already have so much market share. They can't grow that much bigger that quickly, just like the United States, versus some of the emerging markets, which are some of your smaller countries, which are now a little bit more edgy. They can do more things to grow bigger and faster because they don't have that same market share yet. This does two things. One, it kind of diversifies your money because now you're invested into a country that doesn't earn on United States dollars. These countries have their own currency, and also you're diversifying in the economy because now it's an economy that's not reliant on the United States economy. So if the United States economy were to go into a decline and you're invested in some of these emerging markets, well, you're still okay because these economies might not be directly affected by the United States decline. Although practically speaking, the United States economy does affect most of the major economies around the world. What you're doing when you invest in these emerging markets is you're starting to diversify not just within one asset class, but within different asset locations. Now, if you want my personal advice, I invest some of my money into emerging market ETFs, but it's not a major part of my portfolio. I invest some of my money into physical gold, and I also invest some of my money here, but it's not a major piece of my portfolio. A lot of times people get hung up on the timeline, and what you have to remember is that these things don't happen overnight. These things can take years, if not decades, to really evolve and develop and happen. So you don't want to just change your entire investment strategy tomorrow and never invest in a stock in the United States again. You got to be smart, be patient, be calm, and make financially educated decisions, not emotional decisions, because the people who make the most money, whether we're talking about a decline or an upswing, are the people that are financially educated and that invest their money financially, not emotionally. If you enjoyed this video, here's my video summary on the changing world order that I think you'll love. Thank you for watching, and as always, keep hustling. Start to see more external conflicts between the country that's in charge and the country that's in second place but growing very rapidly. The country that's in second place that's growing very quickly is China, and you're also starting to see more growing tensions